Good morning traders, it's Mark here from Trade and Train. Nolan unfortunately is feeling a little bit under the weather, so I will be hosting this morning's analysis video. And what are we looking at? We're looking at the Santa Claus rally. Is there truth behind it? And if so, where can we look at buying the dip, if there is going to be one? So what happened? Why did we see the shakeout or the sell-off in indexes, only then to see this market reaction that has just taken us springboarding straight back up to the highs? Well, the initial reaction was basically caused by Jerome Powell removing the word transitory from his inflationary statements when the Fed last were going through a Q&A testimony. Now, what does that mean? Well, when they say that it's not transitory, basically they're insinuating that the inflation is being caused not just by bottlenecks in supply chains, it's actually there. So what that leads on to the market predicting is that interest rate rises are soon to follow, or sooner than anticipated. And he also mentioned that the tapering, the quantitative easing, or the asset purchases, the mortgage-backed asset purchases, bond buying, was all going to be cut off much sooner than expected and reduced to zero. So what does this mean for equities and indexes? It means that essentially the market is not going to be propped up. Interest rates increasing means that those that borrowed money to buy shares or equities, it's going to be it's not going to be cost effective or as effective. So you'll probably find that people that were buying them on loans, so to speak, or borrowing capital to buy shares back, will potentially release some of those back into the market. So what you find is this is what causes the indexes to drop. Now, they've been bought up massively on this speculation. We also had the Omicron variant come out that spooked the market a little bit. But are we learning to live with the virus? Well, I hope so, because it looks like it's here to stay. So on the back of that, how could we have looked at trading this, and where can we look at a future trade? Well, some of our members, they looked at the double bottom that was formed here. Were there earlier opportunities to get in? Absolutely. But if you want to basically play your cards on the air of caution side, then we're looking at the double bottom that formed through here. We can see that that was around a big even number, the 4,500, and this blue zone here was a key daily support. We can also see that we have our counter trend line with multiple touches through here. So what we were looking for was the double bottom to break the neckline and then run up. Now this marker here is exactly where the measured move is. That's the distance from the neckline to the bottom of the double bottom, and that is essentially your target for the double bottom. It's just a measured move, equal move from the lows, forecasting where it's likely to project. Now, with the back of a Santa Claus rally, we do suspect that the markets could potentially continue a little bit further towards the end of the month. So do we want to just keep buying, or are we going to wait for a correction? Well, what we're looking for here based on our analysis is the last impulsive move here, which is from this higher low, the last impulsive move here. If we were to look at our retracements, our fib retracements, where do they come into correlation with any structure to the left? Well, if we look left on the 61.8, we can see that comes in lovely to the double bottom neckline. And then talk about forecasting. Where would we look to forecast? Well, ideally we want to see if the market is going to continue to roam within this broadening wedge or broadening channel that we can see happening. So we're looking for the market to pull back into here and then forecast going back up into this extension, where we can see that the golden ratio, the 61.8 extension, comes in really nice. Now, what other confluences can we add? Well, if we bring in the Fibonacci trend base, what I'm looking at is if this is going to be a move from the high, from the low to the high, and back into the 61.8, where can I see a measured move, and where can I also see any sort of correlations? Well, we can see that if the market's going to pull back into the 61.8, we can see that measured move with the 127 extension comes into exactly the golden ratio, the 61.8 extension of the original move. The other thing we know is we've got trendline resistance coming into this area. So ideally my scenario would be I'd want to see price come back into 4,600. Is that likely to happen? based on market sentiment and seasonal bias, I'm not sure we'll get that deep retracement, but I'm going to put my alert in here just in case. So if we don't, then is that analysis gone to waste? No, it's there. If it triggers this alert, then I'll be looking to buy. How else can we look at trading this market? Well, I'm going to have to drop down to a lower time frame, because what we're seeing right now is a consolidation, and through consolidations this can also be known as a weak retracement. Now weak retracements mean strong projections, so we could see this move. So if we do break out of this area here, create new highs, then I'll be watching intraday timeframes to get long this market and run up into this area. However, if price breaks through this consolidation to the downside, then I would suspect we are going to come potentially and test this area. If that is the case, then fantastic, I'll be very happy with that, and I'll look to continue trading it. So what other markets can we look at in terms of currency? And if we do see risk on, which is indexes pushing up, or if we see risk off, indexes potentially pushing down. Well, the chart I've got in favor right now is dollar CAD, and this is something we shared on our free Telegram channel. Something we're looking at is a potential head and shoulder formation, which is occurring at a key structural point on the daily chart. So if I just go back to the daily chart and show you what we're looking at. So we've got multiple rejections where we've seen big spikes through, not once, not twice, but 3 times. So we've got weekly resistance at 128.25 in that region. Now you can see the yellow zone that I've highlighted, which is a pre-forecast of a head and shoulders formation. And if we just look at this, we can see the market has made an impulsive move higher, a correction, an impulsive move higher, a correction. Now we're starting our impulse again. Now the impulse in this move, we're looking to form a lower high, which will be the right shoulder. So on that basis, we want to see the market come into this area, and then we're going to look for a rejection of around 127.20. Now ignore this. This is just for this red zone. We're not putting in a sell limit and a stop loss through here. This is just illustration purposes, what we're looking for and where we could potentially target. So based on that analysis, we're looking for, it's just being patient now. We've got our alert set. You can see our alert is sat here looking for price to come into 127.10. If you want to be a little bit more, let's say, prepared, you could put your alert at 127, that big round number, and see if we get any market reactions. So until that point, we can't really do anything in terms of placing a trade. Now, I'm just going to remove the head and shoulders pattern because it does get a little bit annoying in terms of seeing visibility of price action on my chart. So how could the market potentially play out? So we're seeing dollar strength right now against Canadian dollar. We could potentially pull back into the daily pivot somewhere around that and then make another move. So we're looking at a potential A, B, C, D correction, and then that follows with the next impulsive move lower. So we need to see price come up and test the 127. We then need to see a rejection and some kind of it could be candlestick formation, it could be a chart pattern, or we could even look at a counter trend line, break of that, and then trade accordingly. So these are a couple of markets that we're watching that are in correlation with risk on and risk off. So as we're seeing right now, the indexes are slightly off, i.e. risk off. So that's going to see the risk currencies, Canadian dollar, Aussie dollar, Kiwi dollar, being sold somewhat. Now, being sold would be looking at Canadian dollar, USD CAD pushing higher. And then if we are going to see that risk on sentiment come back, we should start to see Canadian strength, Aussie strength, Kiwi strength materialize. So that this one looks perfectly. And then finally, I'm just going to show you the Aussie dollar chart and how we could look at trading this. So again, we're looking at a current risk off market. So potential trading opportunity today, looking at the hourly chart, we've had double top formation, necklines being broken. We could look for a retest in line with the daily pivot and a move down into these fib levels we can see highlighted, or maybe even a retest of the trend line. Now, you're probably wondering what the trend line is. If we go to the daily chart, you'll see that this market has been, we've got bear flag that broke out, big strong impulse, and now we're having a correction. Now this correction on the daily chart, we could see push up to test the support trend line, which will now act as resistance. But before it does that, we need to see a higher low formed. If we drop down to the hourly chart, we'll see that this market has been forming a lovely bear trend, i.e. we've got lower highs and lower lows all the way down in a nice strong aggressive trend, to see then this correction move here, which now breaks our resistance trend line, therefore forecasting that we're going to see another move higher. So we're looking for that potential higher low, but the higher low isn't going to come until we have a movement lower. So where we're looking right now, that risk off move, selling Aussie, selling CAD, selling Kiwi, and then potentially looking for that buy. So the 50% retracement in here, or the daily S2, looks quite a nice area around the 7100 even handle. So it's another 40 points lower potentially from Aussie, and we could see that also looking at Aussie yen as a potential move lower. So intraday traders, if you do like the risk off move, then we could be looking for shorts from the daily pivot around 71.56 and trading that down towards 71. So there's a nice 56 points there, providing the market comes back into that minor daily resistance. Alright guys, that's it from myself, Mark at Trade and Train. We will be back with more updates throughout the week, and I hope you can catch some of these Santa Claus rally moves and the associated ones with the currencies. Just remember to align your currencies and the indexes, and you should be able to use those correlations to your advantage. If you like the analysis, please hit like, share and subscribe, and send it to any fellow traders. Look forward to seeing you. Bye bye.